You know that feeling when you're looking at the chart and thinking, what am I not seeing that the big players are? Those moments when the price suddenly shoots up or reverses out of nowhere and you find yourself asking, what just happened? Yeah, exactly. Today I'm going to introduce you to a tool that can help reveal hidden clues in the market, signals that can show you exactly where the big money is moving. Today's indicator is the Multi-Time Frame Fair Value Gap, or FVG, created by Zierman. It identifies and clearly shows regions known as fair value gaps, gaps in price that often indicate zones of institutional accumulation. I'm going to explain what it is, how it works, and how you can use it to improve your decisions. What is the FVG and how do you use it? The fair value gap is basically a void left on the chart when the price moves too quickly without enough trades along the way. It's formed by a simple 3-candle pattern, a bullish FVG. This happens when there's a gap between the top of the first candle and the bottom of the third. A bearish FVG occurs when the gap is between the bottom of the first candle and the top of the third. These areas can act like real magnets for the price and also indicate where large orders may have entered the market. What sets this indicator apart is that it looks for these gaps not only in the time frame you're using, but also in others using a multi-time frame logic. In other words, you could be on the 15-minute chart and see gaps that happened on the 1-hour or even the daily chart without needing to switch screens. And check this out, it doesn't mark just any small gap. There's a sensitivity and momentum filter that only shows relevant gaps formed by strong moves. This eliminates noise and focuses on the zones that really matter. Another feature is mitigation, meaning when the price comes back and fills the gap. You can choose whether you want the indicator to consider the gap closed when the price fills the entire space or just when it touches the midpoint. Reading of buying and selling strength. Inside each FVG box, the indicator shows bars that represent the buying and selling effort that created that gap. That way, you don't just see the price gap, but also the story of volume and intent behind it. This can confirm the strength of the move or alert you to possible traps. It also features an optional on-screen table listing all active gaps, organized by up or down, with the time they formed and real-time updates. It's perfect for not losing sight of important opportunities. In addition, there's a trend filter that smooths out fluctuations and shows the market's prevailing direction. That way, you can give more weight to the gaps that are aligned with the trend. But now, you're probably asking yourself, how do I actually use this indicator in practice? Well, you can use it for a few things: marking institutional support and resistance zones, confirming entries in the direction of the main trend, identifying possible traps or reversals, and organizing your trading plan based on gap zones that haven't been filled yet. By combining the FVG with other elements of your analysis, you can gain more clarity and confidence in your trades. Now, let me show you how I like to use this indicator together with pullbacks. But before we continue, a lot of you ask me which broker I use to trade Forex, stocks, or cryptocurrencies. And the answer is EXNESS. For me, it's the best and most complete broker out there. If you've ever gotten frustrated with your broker, you'll understand what I'm about to say. With many brokers, orders take a long time to execute. With EXNESS, execution is instant. There are brokers that charge extremely high spreads. At EXNESS, the spreads and fees are extremely low, some of the lowest you'll find on the market. Have you ever had to wait days to receive a withdrawal? With EXNESS, the money hits your account almost instantly. And the best part is, you can adjust the leverage to almost infinite levels, however you want, obviously controlling your risk. So, if your broker freezes, charges too much, or takes too long to pay you, it's time to switch. The EXNESS link will be in the description. And like I said, for me, I consider it one of the best brokers with the lowest fees on the market. Warning: trading involves risk and you can lose your capital. Be extremely careful. First of all, I like to look at support and resistance zones. Notice that right here, we clearly have a support, even with some accumulation. Remember, supports and resistances aren't specific points, but rather a zone. This whole area here is a support and resistance zone for the price. So, in this case, what happened? From this point on, the price started to rise, even pushed by an FVG. We can see this because the line is green, showing that the price took on an upward trend. When it came back into this particular region to thoroughly test the levels and then subsequently moved out of this specific area again, right at that precise moment, a significant FVG, or fair value gap, clearly appeared, meaning there was a strong institutional entry at this exact point in time, leaving this noticeable gap across these three distinct candles. And I can measure that the buying strength was much greater. In other words, there was actually a large amount of institutional money coming in at that moment. What could I do? I could place my order with this pullback being made by the institutional players, right along with them, in other words, on this candle here when the indicator appeared. I can set my stop below this area where the pullback happened, which means roughly at a negative 0.5%, and aim for twice that to the upside as a return, so 1%. The price came and hit it right on the mark at this moment. And for selling, it would be exactly the opposite, but I always prefer to use this indicator only for buying, because I think it's more accurate for knowing when the institutional players are actually coming in with buys. But remember, this content is for educational and informational purposes only. It's not a recommendation to buy or sell any assets. Do your own analysis and consult professionals before investing. The multi-time frame fair value gap isn't just a gap detector. It's almost like an X-ray of the market, showing where and how the big players have acted. If you found value in this video, subscribe to the channel so that whenever I post new indicators here, you'll be the first to know. Also, leave a like to help the channel grow, and comment more indicators so I can bring more tools like this one that reveal institutional strength in the market. Thanks, and see you in the next video.